This week in AI, the world's most powerful AI companies just got told they can't fast track their way into the most powerful index on Wall Street, and the dollar number attached to that decision is enormous. I'm Joshua. Let's get into it. On June 4th, 2026, S&P Dow Jones Indices closed a month-long consultation on whether to bend its rules for so-called MegaCap companies, and the answer was no. Quoting the official press release, no changes will be made to the eligibility criteria, including financial viability screens, seasoning period, or minimum IWF. In plain English, the S&P 500 will not shorten its 12-month seasoning period, will not waive the requirement to be consistently profitable, and will not lower the 10% minimum float just because a company is too big to ignore. The decision was the final word on a request from SpaceX, which had asked for unusually swift entry into the index as part of its blockbuster IPO. According to Bloomberg Intelligence, the company would have triggered roughly $14 billion of automatic passive fund buying on day one of inclusion. OpenAI would have netted more than $8 billion. Anthropic would have netted roughly $4.6 billion. That money is not a gift. It is the $7.5 trillion in passively managed funds that mechanically buy S&P 500 constituents in proportion to their weight in the index. Index inclusion is, for a moment, free demand with no marketing cost. But SpaceX, OpenAI, and Anthropic are not ordinary S&P 500 candidates. SpaceX reported a $4.28 billion loss in the first quarter of 2026 and carries roughly $29 billion in debt accumulated from its AI infrastructure buildout. OpenAI and Anthropic are unprofitable by design, spending more on training and inference than they are taking in. The index committee's stated reason for the denial was that exceptions to the financial viability, seasoning, and IWF requirements should not be granted solely based on market capitalization. In other words, a giant private valuation and a giga IPO do not, by themselves, earn a waiver. The wider context matters. Morningstar valued SpaceX at roughly $780 billion, less than half the $1.75 trillion IPO target, and well below the $1.5 trillion private market valuation. Other index providers moved the other way. Nasdaq published a methodology update on May 8th that would let SpaceX enter the Nasdaq 100 within 15 trading days, and FTSE Russell is letting follow on companies into its Russell Top 500 on the 5th trading day. So passive money will still find SpaceX. It will just find it through different wrappers, with the Invesco QQQ Trust as the most obvious channel. Why this matters is the part the AI industry has not absorbed yet. For the past 3 years, the unspoken assumption inside every frontier lab has been that the public markets will absorb the capex bill. Trillion-dollar training runs, gigawatt data centers, orbital compute, the whole space race is being financed on the premise that there will be a buyer of last resort at the moment of IPO. The S&P 500 just said, not on those terms. If you want the index, you wait a year, you post a profit, and you float at least 10% of the company. For SpaceX, OpenAI,